Japan plays one of the most important roles in the global financial system today and has possibly the largest impact. Its currency, the yen's exchange rate, is one of the most important financial indicators to exist today and can impact global markets, as we've seen recently through some large dips. So why is Japan the greatest threat to the global financial system and to crypto, and what is it planning? That's what we'll be looking at this video. So please do like the video and subscribe to the channel so I can continue to offer more content for you in future. Just a quick reminder, you can contact me if you're looking for crypto coaching. You can sign up for a free account with Coinly using the link in the description to this video, which is one of the best automated crypto tax platforms out there. If you're looking for more specific tax advice based on your personal circumstances, I've partnered with a leading crypto tax company in Minor, and I'll leave a link to contact them directly in the description to this video. And finally, I've included a link to Trezor's website in the description for anyone looking for one of the best hardware wallets or cold storage out there, with 2 new models released recently in the Trezor Safe 3 and Trezor Safe 5. Just a reminder that nothing contained here is financial advice, and let's jump straight in and take a look. To understand why Japan is one of the greatest threats to financial markets, in my opinion, we need to first look at its carry trade. So what is a carry trade? Well, a carry trade is a strategy that involves borrowing, normally a currency, but at a low interest rate, and investing in an asset that provides a higher rate of return. And Japan is an example of a country with low interest rates, because these have been kept very low, as you can see here, reaching 0.5% in 2007 and 2008, but that's about it. Was actually negative all the way from 2016 to March 2024, when the Bank of Japan increased the interest rate, which we'll see again a bit later in this video. So coming back to Japan's carry trade, Japan issues or prints more yen, and to put it simply, this is borrowed at very low interest rates, as we've seen, and then this borrowed yen is converted into dollars or another currency and invested in international markets to gain a higher rate of return. So in tech stocks, bonds, other assets, other currencies, etc. And then you could convert the dollars or whatever currency back into yen and then repay the loan. And this is how Japan has been able to accumulate such a large amount of foreign assets and maintain a very low interest rate because of this carry trade. And it's not just Japanese individual investors doing this, it's huge, because it's Japanese pension funds, insurers, banks, etc., which have invested abroad. So as a consequence, Japan holds an awful lot of assets around the world. And we can see an example of this here, with Japan holding the most amount of US Treasuries, or US debt in other words, out of any country by a long way, at over $1.1 trillion worth. So it's certainly connected with the largest economy in the world, the United States. And if we look at the Ministry of Finance in Japan, you can also see here the assets of Japan's international investment position from the end of March 2024, with foreign portfolio investments at a massive 666.86 trillion yen, which is about $4.54 trillion worth of these assets held abroad. And I'll include a link to the full report from the Ministry of Finance in Japan's website in the description of this video if you want to check this out a bit further. So this gives you an outline of this carry trade and the huge amount of assets that Japan holds internationally. And many hedge funds and investors have bet against this carry trade for decades, and that the Japanese economy should surely collapse, given that they've printed so much yen, kept interest rates so low for so long, and that it has higher debt to GDP than any other country, standing at well over 200%, as you can see here. But nearly every time they've lost trying to short the yen and bet against the Bank of Japan, with just a few examples you can see here, hence why it's famous for the name Widowmaker trade. So having looked at Japan's carry trade, what is happening now to change this and cause the Bank of Japan to increase interest rates, as we saw in the graph a bit earlier, which causes it to be such a threat to global financial markets? Well, the problem for Japan is that the yen has been depreciating. If we look at it here against the dollar, from about 103 at the beginning of 2021 to over 160 by July 2024. So the US dollar is strengthening here against the yen, and the yen is weakening. That's when the line goes up here, and the yen strengthens when the line goes down, basically. So Japan became concerned about the depreciation of its currency and in the rising inflation over this period of time, because this affected households and the Japanese, with things costing more, rent, wages, etc. going up. Again, as you can see here in that time period. So to try to combat this ongoing weakness in the yen and higher inflation, the Bank of Japan decided to start to normalize or raise interest rates, which you can see here with the CPI indicated in red, and you can see this large increase in inflation along with the increase in interest rates being the yellow or orange line here that's close to zero. But this obviously goes against the carry trade that we saw a bit earlier, because there's then less incentive to borrow yen if there's a higher interest rate. Because the Bank of Japan has raised interest rates twice so far in 2024, as you can see here, as I think this graph's a bit easier to see. Once from minus 0.1% to 0.1% back at the end of March 2024, and then again from 0.1% to 0.25% at the end of July. This took interest rates in Japan to levels not seen for 15 years, was the largest rise since 2007, and this came just months after the Bank of Japan ended 8 years of negative interest rates. And they also didn't rule out another hike, but did say that they wouldn't do this in poor market conditions, which we'll come to next. The Bank of Japan also released a plan to start some quantitative tightening by slowing its massive bond purchases, which could reduce the Bank of Japan's balance sheet by up to 8%, as announced by Ueda, the governor of the Bank of Japan, who only came into power in 2023, is certainly a change from the previous leadership. And you can see an example in this table that it's already sold $59.5 billion worth of US Treasuries in total from March to May 2024. And I included 6 months from December 2023 on the right that you can see, going to May 2024 on the left. So you can see that Japan has sold more in this time frame, as has China, but the UK has accumulated many more T-bills, with Luxembourg and Canada increasing too in these 6 months. However, Japan can't just walk away from bond purchases completely, as this would collapse prices and they'd become insolvent. So they need to do this over time and need those with money to invest in the yen so that it doesn't again become insolvent. So for example, the large Japanese firms, banks, insurance companies, etc. And they'll probably incentivize these firms to do this because interest rates are increasing and they'll get a better return than they did previously by investing yen in Japan's markets. So this is the balance that the Bank of Japan has to strike to strengthen the yen and repatriate its currency back to Japan. And we saw earlier the huge amount of foreign assets that Japan holds. So the main risk for global markets, assets, and risk assets in particular like crypto, is this huge amount of assets potentially being sold, trillions of dollars worth, which is why there was a huge dip in the markets and a lot of panic, which could well happen again as Japan continues along this path. So I personally would be careful about being too leveraged and see if there are any more dips to buy into rather than lose out. And to look at these market dips I've just mentioned a bit closer, and in particular at the result of the Japanese interest rate increases and reduced bond purchases, the Japanese yen has recently strengthened against the US dollar, as you can see here with the big recent drop in this graph, with this being about 9% from just July to August 2024, after a long period of weakness for the yen and with the US dollar strengthening, as we saw earlier in this video. However, this also caused a large dip in global markets. For example, you can see here that the S&P 500 went down a bit in July, but there was a large drop from the 31st of July, which was the same day that the interest rate increase was announced by Japan, to the 5th of August, which was probably the worst day for markets, as we'll see next. For example, Japan's Nikkei 225 stock market index, which you can see the performance of here so far in 2024, which closed 12.4% lower on Monday the 5th of August, and which was its largest drop in one day since October 1987. But it did rebound 10% in a day afterwards, as most indexes, assets and markets have in the past few days, in fairness. And finally, let's take a look at whether this affected crypto and Bitcoin, because we can see here that it did, and you can see the large dip for Bitcoin on Monday the 5th of August, mainly due to liquidations and people de-risking, going from just over $60,000 on the 4th of August, the day before, all the way down to under $50,000 on the 5th of August. So about a 17% drop in one day. And I suppose the question is, what might be done about this reversal of Japan's carry trade, given the large amount of assets we're talking about that Japan holds in the multiple trillions of dollars? That's obviously spooked markets once already. Well, if Japan does carry on with this, then the US, EU, etc. would likely need to print more money to make up for the shortfall. Or it might do this another way, by incentivizing banks, money market funds, etc. to purchase these T-bills that Japan's looking to sell. But either way, it would be adding liquidity into the markets, which I covered in my previous video. And it'll also be interesting to see what China does too, moving forward. But you need to go through these difficult periods of volatility and panic first, with other factors at play, such as the large geopolitical risks that we're seeing, which could again have a large impact on markets. But the end point could well be more liquidity and higher asset prices, as we've seen in history, and a large crypto bull market, importantly. But that ends this video looking at Japan's carry trade. And as always, I'd love to know what you think in the comments below about it. And if you are interested in more of a tailored approach to your crypto education, and you think you'd benefit from having someone look over your shoulder and guide you on your journey, I do offer one-to-one coaching to those who have the desire and the means to educate themselves further. And there are links in the description where you can message me and book in a free video call to see if we'd be a good fit. There are also links to Coinly, Trezor, and to contact Miner in the description of this video also, as I mentioned at the start of the video. And if you found this content interesting, please do like the video and subscribe to the channel, as it really does help. And have a great day.